What's up, guys? Welcome back to another episode of the BlockHash Podcast. Today we have on Portal. Specifically, we have on Chandra, the CEO of Portal, to talk about what they're doing within the DeFi space, what their product suite looks like, and some of the things that they're offering right now in crypto. So we're going to do a bit of a deep dive into them today. Chandra, welcome to the show. Super happy to have you here, man. It's a pleasure. How's your week going so far?
Thank you so much for having me. It's been a great, productive week, and I'm excited to be here.
To start, let's do this. Tell us a little bit about yourself. I'm sure people are going to be very curious what your background is like, your personal story, and how you wound up, with Portal, with the inspiration behind that too.
Yeah, so it's not the typical story. I'm a doctor by training. I went to medical school, and then I wanted to go the academic route. So I was in a PhD in biophysics, and the academic track didn't suit me. After passing the generals, I was like, I can't spend another 18 months finishing up my thesis. So let me go to Silicon Valley. And I've always, I observed that in my free time, I was actually not reading a whole lot of scientific papers. I was reading a lot of business books. I was reading, all of the old classics from, Michael Porter's and all that stuff in the library, which the business section fascinated me. Entrepreneurship section fascinated me more than the scientific, literature. Although I still retain the core ethos of science, which is being rigorous in everything you do and having a very logical and analytical approach to doing things. So I moved to the Bay Area, started a medical device company, a medtech startup, raised, had to learn the entire process of entrepreneurship from fundraising to building teams to legal to financial to accounting to everything. Um, Venture finance, all that stuff. Raised a Series A, ran that through 4 years. Almost single-handedly took it through preclinical trials, and then terrible things happened in that space. MedTech completely got decimated by regulatory changes, FDA, Obamacare, putting 2% tax on revenues on medical devices, et cetera, et cetera. So we sold the IP to that. And then I ended up taking some of the knowledge that we gained. It was basically like neck deep in the metabolic science and nutrition science. And I've always been, fascinated with how do you extend longevity with nutrition and lifestyle. And so combining that with software, me and my current co-founder, actually, my CTO, started a company called Fuel. It was the world's first AI nutritionist. What we would do was we would take all of the data that is pertinent to your lifestyle, which is your sequencing data from any DNA provider, like sequencing provider like 23andMe, et cetera. We would plug into your APIs for your Apple Watch or Fitbit at that time. We will get your lab values from Quest or LabCore, and we'll create a consummate, like a personalized nutritional profile of you, which actually adjusts and changes in real time based on your sleep patterns, your activity levels, how your body metrics are changing. And then it would give you personalized nutritional recommendations. And then what we would do is we would actually ship those perfectly portioned, timed meals to your door on a subscription basis. And, that required a whole bunch of innovations that the world doesn't know about because the company failed due to financing reasons. We had to improve on packaging. We had to do the first NFT tag ever included on a fast-moving consumer good. So when you open the package and eat it, the app would log your calorie consumption and automatically create dashboards for you as to how much you're eating, when, and intervals and timing and all of that stuff, and correlate that with how your body's performing and all of that stuff. The timing ended up to be very unfortunate. We had great metrics. We had a CAC to LTV ratio of like 3.5, CAC payback in like less than 5 months. CAC payback in less than 3 months. it was all going well. Unfortunately, the venture community by that time has wasted $1 billion into shipping meals by whatever means necessary, right? They thought that was the big next thing. And so, Munchery, you talk about, there's a whole bunch of companies that came. What was the other one? Um, $1 billion was wasted from Blue Apron all the way down to with business models that never made sense. And they thought distribution was the key. And these weren't like software startups, right? Like unit economics mattered from day one. And by the time we went to market, it's like, oh man, this food delivery space is dead. It's not like people were not eating food. It's just that your model sucks and it's negative returns at scale. And we had a very hard time telling that story to the VCs who've already burnt $1 billion on this. The one good point they had was that customer acquisition costs were rising because these companies were desperate to spend the venture money and show top line growth no matter what, and profitability be damned. So the lesson I learned from that, and so we ended up actually licensing out and selling that software to another company, and then I took a sabbatical and I was waiting on what to do next. And that was in 2017. I first mined Bitcoin in 2012. Never actually looked at it as a business or an entrepreneurial opportunity. I wanted to, from a philosophical standpoint, it was wonderful to separate the state from money, which is 90% of the problems that we have in our country and most of the West today is central banks and government control of money. And but never actually wanted to do anything in that space, because on top of your entrepreneurial risk, your market risk, your financing risk, your technical risk, all of that stuff, you layer on platform risk. Who knows when the government is going to kill Bitcoin, right? So didn't do anything. 2017, I was sitting around doing nothing, and we still had that co-working space, office space, and my co-founder says, one of my other co-founders who joined later in the company, hey, you got to look at these Ethereum ICOs. And I was like, what the hell are they? And he's like, well, this guy or this gal in Georgia wants to put medical records on the blockchain. I was like, what? And then I ended up doing a deep dive on all of those fundraising mechanisms, and just to kind of learn that space, have participated in some of those projects, got to know, mostly to learn the founders and the space and how they're thinking about it and what they're doing and how the venture community is thinking about it, and came to the conclusion that most of these are bridges to nowhere. The ethos of Bitcoin was that it was rigorously built to solve one problem, which is it's the base layer money that is separated from the state. It invented several things, but among the most important things is like, first time, how do you link real world energy resource consumption to actually production of money in the digital realm, right? Gold that's exactly what gold does. And the Nakamoto consensus and proof of work algorithm is a significant advancement in monetary history. So now you have this thing called the dynamic multi-party signature scheme, right? And the key innovation there is it's decentralized. Anybody can come and join, and anybody can leave. There is no identity in the system, but it is still Sybil resistant because of resource costs. And so when you look at that, and when you look at all of these other projects trying to claim the blockchain does this or that, it didn't make any sense. But there were going to be all chains that tried to improve on Bitcoin, right? Either with more functionality, like Turing completeness, which may be useful, or something else. And so the question became like, first, what are the big problems in the space? The number one problem in the space is, see, when you want to build something, you want to identify real problems, because you can waste 5 to 10 years building solutions to imaginary problems. At the end of the day, it results in nothing but wasting your time that you can't get back. The single biggest problem in crypto from day one has always been custody. What is the problem with Mt. Gox? Mt. Gox wasn't able to custody user funds properly. What was the problem with FTX? It's the exact same thing. What are the problems with bridges like Wormhole and Orbit and Multichain, and like $2.8 billion lost in bridges just last year alone? And that's just on-chain custody. So all of the problems, almost all of the problems in crypto outside of fraud, track back to custody, poorly secured user-friendly custody. And so we said, well, this problem isn't going away. There's going to be more blockchains, and we need a way for cross-chain, trust-minimized, decentralized exchange, right? And then when we started in 2019, people are like, well, there is nothing cross-chain and there is no DEX. So you guys are building a bridge to nowhere. But that turned out not to be true, because the first principles were correct. There's going to be more chains, there's going to be more need for cross-chain exchange, and there's going to be more of these attacks. Because if you look under every bridge, it looks horrible. You're talking about hundreds of millions, billions of dollars of user funds secured by database administrators getting paid $80K. And the architecture of these bridges, some of them, and they all try to cover it up by saying, oh, we have ZK. It's like, if all of your theories were true, you wouldn't have this many hacks and losses. So the era of custody you can define in three distinct eras. 2010 to 2019 was the centralized exchange custodying user funds. 2019 to 2024 was on-chain custody of different kinds, whether it is multi-sig, right, like most Bitcoin L2s do. Give me your Bitcoin, I'll hold them in multi-sig, I'll issue these assets, and when you want your Bitcoin back, well, give me your Bitcoin works, I'll give you your Bitcoin works or not is something to be seen. That's that's the thing with all these custodians, right? It's bridges, basically the same thing, custodied by a set of validators who have some collateral. And if the value of the collateral crashes, the expected value is to take your Bitcoin. 3, you have wrapped assets, which are kind of derivatives, but the actual underlying asset is held again in some form of a multi-sig or a validator custody. And bridges are basically the same thing. So you're back to on-chain custody. So that's not 2019 to 2024 is on-chain custody, which has also been proven to be a disaster. So 2024 on forward, cross-chain markets will be custody-less, and that's our thesis. And that's what Portal is building. We've built the first non-custodial interoperability protocol on Bitcoin. And how does it work? It works using the key piece of technology we invented is called BitScaler. It works using layer 2 atomic swaps against these AMMs, which are modified channel factories that are built on Bitcoin side and equivalent smart contract on the other chains. And basically, when people trade, they are exchanging messages that revoke previous states and update new states. So the balances change in these channels, nothing with minimal on-chain footprint, because nothing is actually broadcast until closing of an epoch. Kind of like a lightning model in the sense that the security guarantees come from you trusting the security of the underlying blockchains, and then you trusting the cryptographic hash functions that you use, or the signature schemes that you use to create and revoke old and new states. But this is done in a network instead of in one-to-one channels, and it is cross-chain. So that's it's a key innovation. Our goal is to bring the benefits, all of the benefits of a centralized exchange, right? Which is speed, low transaction costs, high liquidity, but without a third-party custody and without the risk of loss of privacy or user funds. And another key innovation that we bring to the table is called non-custodial delegation. So the Portal Notary chain is in the middle, transmitting all these messages, recording all these swaps, and broadcasting the appropriate transaction to the appropriate chain at the right time based on the time logs and stuff. And for that purpose, they get paid swap fees, but they never are in custody of user funds. So the worst thing that can happen in bridges, bridge-based systems like Thorchain, Axel, Wormhole, etc., is you lose all your money. The worst thing that can happen in the Portal network is the chain halts. You have to wait for your timeout to broadcast your state to the main chain and then get your money back. So it's a time period delay versus complete catastrophic loss risk. That's the and you get uh, the speed and low transaction fees and everything else, like a bring it to parity with centralized exchanges.
Got it. So taking all of that and kind of wrapping that together, you guys have kind of a product suite of different things that you offer with Portal, compared to other DeFi, protocols, platforms, um, opportunities out there. I think you guys offer a bit more than the average.
When we started to build, we wanted to build a real software company which provides infrastructure, and so BitScaler is the architecture. Based off of that, there are two products that we offer as of the moment. One is called the Liquidity Router, which is being integrated into more than 50% of all the Bitcoin L2s. It provides a non-custodial way for your assets to have a permissionless peg out into Bitcoin L1 assets like ordinals and runes, ETH L2 assets, etc. So instead of using a bridge or holding the custody and risking user funds, you can integrate the Portal Liquidity Router. The second one is called Swap SDK. That was built for single chain DEXs and multi-currency wallets to integrate the same functionality. You'll essentially get the same functionality using the same underlying infrastructure. So those are the two infrastructure products. There's a consumer product also, which is slightly bit different, and I'm sure we'll talk about it.
Yeah, is that the Portal Wallet or RAFA? Because I know you have a few things.
Portal Wallet is our reference implementation of how you would integrate the Portal infrastructure into a wallet or a DEX. That's going to be available to the public. It's in test flight now, but it's going to be available to the public this week. The RAFA is a completely different thing. It is a layer of financial superintelligence on top of all of your exchanges and brokerages. So let's say we solve the custody problem. It's safe and easy to do investing or trading, but what should you invest in and trade in? And that's where RAFA comes in. So RAFA is built by Abhinav, who is the head of AI at our company, comes from NVIDIA, was a senior engineer there for 8 years working on computer vision and machine learning algorithms. It was his brainchild. His idea was that investing, especially for a busy professional, whether you're talking crypto or traditional finance, does not benefit much from any of the advances in machine learning. And this was 7-8 years ago when he realized this. And so he said, look, I work on this stuff. I know this, and I'm a passionate investor about personal finance. I want to invest in and retire early. So why can't I use the best of machine learning and AI to help people invest better? So what RAFA does is it's we call it the best investment copilot in the world today for any investor. It uses a mix of our proprietary models, quant models, a mix of small fine-tuned LLMs and off-the-shelf in context trained LLMs. There's a lot of optimizations to build the product, and it actually acts like a team of AI agents, each one specializing in one thing. For example, there's a macro, there's fundamentals, there's a options agent, there's a news agent, there's a quant and momentum analysis. All of those actually come together, look at your investments, look at your style of investing, constantly monitor the markets, identify opportunities and threats, and you can actually talk to them, and they talk to you as a team. They exchange ideas, They give you their perspective, and then they summarize the information about anything that you're doing or a portfolio.
Is this designed specifically for sophisticated institutional investors, or could this be used by a retail investor?
Designed for to build the tool that surpasses what the institutions have and put it in the hands of everyday investor. That was our goal. Our mission is for busy professionals who want to invest. How do we bring the best intelligence that the Wall Street institutions and hedge funds have into your pocket? To all
Yeah.
of your listeners, RAFA.ai, you can just go to Apple App Store or Android Play Store and type in RAFA AI, and then you can download and play with it. It's been live. We launched on Product Hunt. It's been the number one product of the year in AI, finance, and investing. Um, we get great feedback from users, and we constantly try to improve it. So what it does is you can ask questions about anything. You can ask questions about, like, hey, what did Apple say yesterday, and how do you think that impacts its stock price in the medium to long term, right? And it'll give you the answers. It'll summarize all the information. It'll tell you what impact it might have on earnings, market penetration, adoption, that sort of stuff. It'll look at the technicals, identify, uh, resistances, and all of the MACDs, RSS, all of those technical indicators that people follow, so they don't have to. Or you can integrate or connect your existing Robinhood account or Schwab or whatever brokerage account that you have, including some crypto accounts. And it'll then take a holistic look at your portfolio, look at the Sharpe ratios, so all that stuff, help you with diversification, give you ideas and insights about um, opportunities to your portfolio, threats to your portfolio. It is like a co-pilot. And we think this is not just a thing that, and again, we like to be involved in problems that are not fads yesterday, right? Like, oh, Web3, oh, DeFi, oh, it isn't that. Look at what's changing in the world. Financial complexity is increasing, right?
Mhm.
Well, generally, um, instability is everywhere, which is basically volatility is everywhere, whether due to macro, geopolitical factors, demographic changes, whatever. Um, Attention spans are decreasing. So you have a lot of chaos and a lot of complexity. And so the dependence on AI agents is going to become inevitable for everyone. And we're just starting with the financial domain, but RAFA actually means robo agents for all. Um, so every complex task that you're burdened with will need an AI agent, and that is the goal: to liberate you from the chores, the needless, endless chores that you're burdened with in a complex, ever more complex society. To actually be your free self, exercise your creativity, do the things that you would like to do, versus spend 8 hours doing paperwork that somebody has
Mhm.
imposed on you.
What else do you think the future kind of looks like with AI, and maybe even in regards to crypto or to finance in general? Because obviously we're moving into a new age where things are going to get way more streamlined, way more efficient. Productivity is going to increase.
So I'm going to just talk about the technology side of things,
Yeah.
because the other side of things doesn't look that good. Whether you're talking about collapse of faith in institutions, or widespread political unrest, or whatever else, macro collapse, um, financial instability, sovereign debt crises, all of that stuff looks terrible. The private sector technology development looks wonderful, right? Like AI, we're all going to have AI agents that simplify our lives. We can talk to, we can um, get massive productivity increases in, right? Um, and there's these things give rise to new sorts of markets. It's not just existing tasks become efficient, which is true. That's the starting point. But new things will be built. For example, the body of work that you produced, you can train a large language model with not that many hardware or software resources, not that much resource costs, and that can act as your proxy in many of the things that you may want to delegate it to, right? And it may even trade for you. It may even exchange information with other people for money, or all sorts of interesting things will open up. And the one thing, the one interesting thing that I find is that there is an underlying base layer money which is permissionless that is actually perfect for all these millions of markets to exist on top, which is Bitcoin. So if there's two ways to look at Bitcoin. One is it's digital gold. The other way to look at it is Bitcoin block space is the settlement layer for millions of markets, and we think that is going to come true sooner than most people realize.
I
And
think so
whether
too.
in
Yeah.
human markets, machine to machine markets, it's pretty much it's
Mhm.
pretty clear.
Yeah. Plus, in that kind of world, you need a digital form of money. Like
Yes.
what we
Because
have
you can't
today
deal with
with
arbitrary
fiat and
policies of middle institutions and rent seekers in the middle. It's just all deterministic.
exactly, it's a system that's waiting to collapse in on itself. And we live in a digital age, and things are moving a lot faster, a lot more seamlessly. We need money that fits the society that we live in today. And you integrate AI into different systems as well. I mean, it helps to have digital money. I mean, you can't really run these systems with cash or
What if
gold
they do a
bars.
chargeback, right? Like the chargeback policies are arbitrarily made. They are not machine code. What if a term of service is a legal thing? It's all of that additional complexity goes away when you simplify it to systems like Bitcoin. That's why it's functioning flawlessly as a system of global seamlessness.
What about DeFi? I know that that's an area that's right now it's very new and it's degen and it's something that's only been around a couple years, but it has the potential to really, I think, reshape the whole idea of finance. And you could argue it already has. Um, but money runs the world largely and dictates a lot of things. And it feels like that's, heading to a heads to potentially be disrupted at some point.
That's a great point. But the interesting thing is it's hard to have an opinion on DeFi because it's such a vaguely understood term. Bitcoin is DeFi, right? It's decentralized. It's money. It allows transmission contracts, all that stuff. Can you do more complex things than what can be done on Bitcoin? Yes, but I don't think the principles of risk and uh, basic financial primitives don't go away just because we put it on a decentralized blockchain. Maybe it enables people with regulatory hurdles to access services that they don't have access to, but the risk is never gone. It's hiding somewhere else. If I'm actually taking this stable coin that is pegged to the US dollar based on an algorithm, and I'm putting this on this thing to get this yield on this other coin, on this blah 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 on this other thing, and then wrapping it in something else, and I'm getting yield through the other thing. There's layers and layers of risk involved. My problem with DeFi is that it's the complexity is always used as a shield, insecurity through obscurity. That's the problem I have with it, because most people who participate in these things don't understand the risk or security models of any of these systems, right? Uh, how many algorithmic stable coins are still living today? That's the problem. It is not like um, DeFi doesn't have any value. DeFi definitely does. I mean, I think many of the real world digital assets that exist today, like in-game goods that have value independent of their tradability, their market sizes will expand exponentially once you introduce permissionless tradability, right?
Mhm.
Um, that's something that is very exciting. Tokenizing dollars and dollarizing many. I mean, you can do smart contracts on USDT, which is very exciting, versus involving 1,000 law firms and banks. You can actually get, so it's a very, very efficient way to borderlessly do these contracts enforced with the blockchain. So that part of it is super beneficial. Obviously, it's exactly like you said. It is the system that fits the world that we live in today, without having to be at the mercy of some arbitrary jurisdiction somewhere, some interpretation of, you know, some people. Um, and so it brings sanity and clarity to contracting across borders and all that stuff. So all of that is good. Um, but I also see a lot of Ponzi schemes that have, price goes up because more people will buy. And that's the other side of DeFi.
Yeah. Again, DeFi is a very rudimentary space still. It's only been around a few years, and you have your mix of, really great solutions that, can really radically change finance in a good way. But you also have the roaring kitties and the Wallstreetbets of the world, that are, pumping and dumping and going crazy in
Yeah,
the
yeah.
space
I
too.
mean,
And
there's,
there's, yeah,
that's a great point. It's one of the things that DeFi allows you to do is permissionless speculation, right? And I do believe that that's an innate human desire that is not going away anytime soon. People are going to want to speculate. They're going to want to gamble on anything that they want, that they can. And this actually is a reflection on society. Is like, gambling seen as a vice or an entertainment is okay. Gambling seen as a virtuous way of earning your living is not a good thing. And so where do you think society falls? I mean, which way is it trending? um, I'm not sure who made this comment, but we have an abundance of intelligence and energy, and a lack of courage and virtue. So the retail gambling mentality on everything and anything that they don't understand, just because someone made 100x, that's not going away. It's addictive. It tugs at something that is fundamental to us. Um, and so unfortunately, those things are not going away.
I think it's part of building new technology. I mean, at the same time, you're going to have people come in and do creative things, and they're going to have fun with it, and kind of break down barriers. It's someone's always going to be able to create a meme coin. Someone's always going to be able to create a Ponzi scheme or a scam. It's a matter of how do we delineate.
And it is very attractive. Look, when you look at, it takes 5 to 10 years to build a company minimum, right? A self-sustaining, profitable company that goes on and produces value consistently over a long period of time. How many people in crypto actually have that kind of time horizon, investment horizon? They want to invest today and get 100x tomorrow, and they talk about it proudly. I'm not sure if we should laugh at it, or we should accept that that's just the way it is and build rails for people to degen more. But it just is not the way the world was built. The world
Exactly.
wasn't built by gambling. Okay, all the other wealth that is produced by productive activities, a part of that goes to entertainment. That's the rational way to think about the world, not that gambling alone produces value.
No, it doesn't build it, but it does attract the attention.
It does
100%.
attract attention. Yeah, it does attract attention, and sometimes bad attention too.
Oh yeah, definitely.
Like of GME market manipulations and all these games that it's and the thing is, it's viral in a way that, there's this great Charlie Munger quote that envy runs the world. You heard about your neighbor who made 100x on GME, and now you're going to buy it knowing nothing about the company, or knowing everything about the company and knowing that they have no business. You would still want to buy it. And then how do we stop it?
It's interesting. I don't think there's a right or wrong answer for it. when you see it, I think it's you see it across technology. It always happens. There's always the entertainment side, the fun side, the deeper, darker sides. Even to the internet, when the internet first came out, like, a third of all internet traffic was Pornhub.
Yeah, yeah, yeah.
So
But look, the analogy is kind of correct. The bad use cases took over the internet in the beginning, no question about it. But if you go back and watch, this is something I recommend to your readers, like Roadkill on the Information Superhighway. It's a great talk by Nathan Mirwal from the 1990s. They practically predicted every single thing that happened on the internet, from Airbnb to Uber to everything else. So the potential for this was known for decades. It just took a long time to be realized. And in that short time period, when all of these nefarious things and the dot-com boom and everybody putting .com and pumping up their stock price happened, that was kind of like a blip on the radar of trajectory of the internet, right? What is that for crypto? Are we in that blip?
I want to reel it back to Portal just a little bit. Add a couple more questions. One on, you guys have a DEX, right, for Portal?
We do, although we support many other DEXs. Again, like I said, the wallet is a reference implementation. It runs the same infrastructure that all of the other wallets that integrate our Swap SDK run. The more wallets and DEXs that are integrated, the more liquidity it provides. Yeah.
What's the extent of digital assets that are available through it? Like, is it mostly like main chains?
Yeah. So it's Bitcoin. A lot of Bitcoin L2s are integrating it. So you'll see more of their assets. Ethereum, ETH L2s. For now, we hope to integrate. I mean, Solana integrates this as well if it's compatible. And then, so our goal internally is to have 90% of all Bitcoin L2s and 80% of blockchains L1s by transaction volume for 2024. We're well on track to do that. So,
How far along do you think you are in that process? That's a good goal to have.
past the half mile point. So we're gonna get there easy.
What about other things in 2024 on your roadmap? Are there other things that you're working on in terms of product suite, things you want to add in, or taking some other things?
Other things, RAFA is gonna have a major revamp with crypto. So now it'll be able to interact with wallets. You can actually tell it to, hey, look at my portfolio and tell me how these things are doing, and it'll analyze the different technical and news-based metrics of all of these different cryptocurrencies you hold, and it'll tell you which one's on the uptrend, downtrend, and then you can say stuff like rebalance it and what's the optimal rebalancing thing, and it'll give you an idea, and then you can do it. Or soon it'll have the ability to connect to your wallet and process transactions for you. That's one. And there's one secret project that we're working on, which we will hopefully come up with by September.
What's something maybe you want to leave with the audience before we're wrapping up the episode? It could be a relation to Portal. It could be a relation, just overall thoughts on the space right now. What's some things that come to mind maybe that you think people should be aware of or think about?
I would actually bring it back to a mix of both. ETFs, ETF fund flows, those are all great, right? So what we're seeing right now in the market is, typically what happened was liquidity entering into the market used to flow through Bitcoin, then to Ethereum, and then to alts, right? Like that was the cycle that everybody was betting on. This looks very different because institutions want to add Bitcoin to their balance sheets as a call option or a put option on fiat currency devaluation, right? Fiat, basically. That money doesn't necessarily flow to the altcoins. It's going to stay in the Bitcoin ecosystem. And that's what we're observing. And so altcoins, the security models are kind of neither here nor there. People don't care much about custody or security or risk. They're far out on the risk curve. Bitcoiners and people in the Bitcoin ecosystem care a lot more about custody and control of their coins and security and risk. And so we are seeing a different kind of a cycle this time. I think it's going to last longer just because of the macro factors, but it also is not going to extend to, hey, I have another new high throughput blockchain for transactions that nobody needs. I have a new blockchain for blah, blah, blah. Those things you will see not being as successful as in the past cycles. If you have real utility and a lot of people are using it and you're able to get to product market fit like Solana, I think you will. But there's kind of like a decoupling in crypto, I would say. Bitcoin ecosystem
Yeah.
will do incredibly well. Um, I think Solana will do very well because of their focus on making it easy for whatever it is that people want to do. And those are the two ends of the spectrum, right? Like maximum security, nuclear grade, military grade stuff, only built for the all other trade-off functionality. Has traded off for this one thing. You take that and you make full ease, functionality, speed, etc. Rest of the things go to on Bitcoin. I think that kind of a decoupling and separation is very interesting. Where's Ethereum in this? I don't know where it fits in this space. Um, but it is quite interesting that this cycle is going to be quite different. The Bitcoin side of things will do amazing this cycle. Whether it will
Yeah.
extend to all the other alts, I actually don't think so, but let's see what happens.
It's very different for sure. And I think a lot of that does have to do with the ETFs and drawing in that institutional interest and capital. And it's just, billions of dollars just now going to sit into Bitcoin.
Understanding markets don't stay static, right? Like
Mhm.
the ICO stories would never sell now. Same way the new blockchain stories won't sell in this cycle. So people get smarter with every thing. So which is why meme coins, which is an interesting thing you brought up, is meme coins work because they are actually transparent, open, much more than many blockchain projects. You know the supply, you know how much liquidity is locked, you know what the community is, and these are kind of like open source version of whatever was being done in the last cycle. So
Mhm.
I don't think this is the end of meme coins. I mean,
Oh, no, I think it's only the
amount,
beginning.
huh?
I think it's only the beginning for meme coins. I
I
actually think the most transparent. I'm not saying they're the best thing people should be, speculating on, but I think they're the most
well, at
transparent
least
because they have a
providing
singular
maximum
purpose.
information is better than having no information or asymmetry.
Yeah, and they're fine-tuned to have literally one single purpose, and that's to pump up and make money. And I mean, however you look at it, I mean, it is very simplified and transparent in that aspect. So I think it's always going to be attractive to people, and it's going to feel like gambling. It's, oh, there's an opportunity, there's a chance. If I throw a little money here, who knows? Maybe it will. The community will drive it 1,000x, and I'll be rich. It's like gambling for people.
Yeah. Yeah, with full transparency on, I mean, for the good ones anyway, on the supply limitations, the liquidity locked, etc., etc. So yeah, it's just the beginning for meme coins, so they'll do great.
What do you think on retail? Because I think the retail investor has been hurting for a while now. And I think a lot of it's the economy and the inflation. And, there's an argument to be made. They just haven't been able to get into the market yet, like they have in past cycles. And it's just institutional money that's dominating at the moment.
I do think there's some truth to it. Retail retains memory, right? Last
Mhm.
cycles, people that were burned in the last cycle, until they see examples of someone making huge gains, is not going to come back to participate. There's some element of that. Also, the stock market, which is perceived to be much safer, is and probably is, because anytime it goes down, the central banks inject liquidity into it to protect it. There's no such thing in crypto. So retail money, when the world was placid, this was the exciting place to be. Now look at the stock market. nothing makes sense there either. So,
Hmm.
so there's everywhere you look, you can gamble. You can gamble on GME to Nvidia stock,
Hmm.
and retail participation. I think you're right, hasn't started, but outside of the U.S., it has, because most of the rest of the world doesn't have access to U.S. markets.
Yeah,
Um,
that's true. And it's interesting too because crypto is a global market
correct.
that is 24/7. To
Yeah, but the big money is
most people
here,
forget
and
that.
if the U.S. retail starts taking interest again in crypto, then you will see the alt pumping season and all that stuff.
It's an interesting time. I think a lot of things are going to shake up between this year and next year, and obviously there's a lot that can affect the industry. But um, Chandra, thanks for taking the time to come on today. Really appreciate it. Where can people go to learn more about Portal? Website, community, socials. Where would you direct them?
Absolutely. So go to portaldefi.com, and on Twitter it's at portal_finance. And if you want to follow me, it's CSENTROPY at CS Entropy on Twitter. You can join our Telegram channel. All of those are linked to on portaldefi.com. And RAFA has its own website. It's rafa.ai, RAFA.ai.
And it's on the App Store and Google Play Store, right?
It's
I
on the
just
App Store
downloaded
and
it on
Google
my
Play
phone.
Store. Yes, yes, yeah. But try it out on your iPhone.
100%. I will today. Um, but awesome, man. It's been great having you on. A lot of great information in this episode too, both on Portal and what you guys are doing, but also overall on the industry and where we're at and how things maybe will go and this industry will continue to evolve. So thank you for taking the time to share today, and let's do it again soon.
Absolutely. Thank you for having me. Good luck.